Is US dollar going up or down in the upcoming trading week? Let's go to the charts and reveal the secret. Hi traders, welcome back to the new weekly forecast for the week starting on January 15th. Let's dive into the charts of USD index to find out the trend of US dollar and some more trading opportunities for the upcoming week. So let's begin with DXY. So here we start with the higher time frame, that is weekly. In fact, I'll go to the monthly first, and based on the monthly time frame, what we have done here, I've marked a rising parallel channel covering the lows here and the highs, and currently it is in the pullback mode, in the retracement mode, and it is hovering exactly on the dotted line, that is the 50% of the bullish rising channel. And based on the histogram, the price action is bearish. Now let's go to the weekly. On the weekly, what I've done, I've here joined the highs and the lower highs. So we have high and lower high, and by connecting these highs and lower high, I've plotted a bearish channel inside the rising channel. Now based on this, we can see that the price is again getting a bullish bounce exactly on the falling dotted line, that is the 50% mark of the falling channel. So here we have strong resistance coming from the 50% area of the bigger channel, the monthly channel, which is rising, and we have support coming on the weekly falling channel. That's the reason currently the price action is stuck between these two diagonal lines, and I can expect for a while the market to be unclear and consolidating between these two areas. So rising line and the falling line. So we have a formation inside these two diagonal lines. Now let's quickly go down to the daily. If you want to see a clear picture, so here we have high and lower high. Now here we also got a high and a higher high. So from the higher time frame, we are into the lower high mode, and on a lower time frame, we are into a higher high mode. So it's a confusion, not a clear picture. We also got bullish divergence here some time ago, and based on the bullish divergence, this is the breakout structure. So you can expect we are in the retest in the pullback mode, and dollar can rise further, at least towards the boundary of this falling channel. So the precise level is somewhere around 104.45 to 105. So the next upcoming target for US dollar index is 104.5 to 105. Currently we are at 102.43. Moving down to daily now. So based on the daily time frame, we have high, lower high, lower high, lower high, and lower high. We also got bullish divergence on the daily time frame. So comparing the last two lows, we have low and lower low with bullish divergence on MACD histogram. Currently, we are in the rising mode, and based on the Fib extension level, it can go to 61.8 or even to 100% mark. So currently the price action on the lower time frame is again sideways, so it will be more clear on 4-hourly chart. Now based on the 4-hourly chart, you can see after developing the bullish divergence on 4-hourly chart and daily chart, this is the low and lower low I'm talking about, with bullish divergence coming into play. And after this bullish divergence, we have sideways action. So we got a rise, and now it's moving sideways. So we can expect after this sideways consolidation gets over, a continuation to the upside, especially towards 61.8 or towards the Fib extension 100% mark. So that's again pointing towards 104.4 as the future target. Coming down to hourly chart. No clarity, just sideways consolidation. and here I have marked the fib extension taking into account the lowest point and the highest point. So here we got the first target and the second target. Again, based on hourly chart and 4-hourly chart, the price action is sideways. No clarity on the lower time frame. But for the short term, the higher time frame looks bullish. So the dollar-based currency pairs like euro dollar, pound dollar, Australian dollar, and New Zealand dollar can remain bearish for some time. Now, because we do not see much clarity on the lower time frame on dollar index, so definitely it makes more sense to look for trading opportunities in the cross pairs. So the first cross pair for the upcoming week is euro pound. Starting from the weekly chart. Now here, if I go to the line chart, you can see that we have high, then we got lower high, and lower high. We got low, lower low, lower low, and low. And now the market retraces back. We do not have any bullish divergence. Comparing the last two lows, I can't see bullish divergence, but in fact the market bounces up. So this bounce could be taken as corrective price action. So in this case, we need to go back to candles. Let's mark fib retracement starting from the highest point of the candle to the lowest point. The swing lows I'm talking about. Fib retracement from the highest to the lowest. So if you notice, after this downward price action, the corrective action has taken the price exactly to the retracement of 80%, and since then the market is creating lower highs and lower lows. So here we go again on a line chart and comparing the high, lower high, lower high, and lower highs. So definitely the price is creating a sequence of lower highs. Then we have low and equal low. So this equal low comes into the picture with bullish divergence. But we do not see the breakout structure. So based on this bullish divergence, the breakout structure is not yet done. So definitely the price action remains bearish. If you zoom in further, you will find that the MACD is also bearish at the moment. Now let's quickly move to daily chart. On the daily chart, I can see again a sequence of lower highs and lower lows. So we have high, lower high, lower high, new lower high, and new lower high, and again a lower high. I can see a pattern of lows, lower lows, equal lows, and now we have a higher low. So definitely it's creating a triangular consolidation here. You can connect from the top to join the lower highs, and here we have equal bottom connecting to the higher low. So this is how I can see. Now we are very close to the lower boundary of the triangular pattern, of the triangular formation. So let's connect a trend line here. And let's connect a trend line from the top. Now we are very close to the lower boundary, and the MACD looks completely bearish on daily chart as well. Now applying the fib extension from this high to the first low and to the lower high, you get the extension towards the downside. That's 61.8, and the price mark is 0.8531. So if the triangular pattern is broken, this support is broken, then we can expect the price to reach to the next horizontal level of support, and that's coming exactly on the Fibonacci extension level of 61.8 with the level as 0.8531. So this is my target marked for the upcoming week. Right now we are at 8583, so we still have the potential downside move of another 50 pips in euro pound. Let's go to 4-hourly chart. Even on the 4-hourly chart, the price action is bearish. The price behavior is bearish on MACD as well. And we have a sequence of highs, lower highs, lower highs, and lower highs, and lower highs. So definitely starting from weekly time frame until 4-hourly, the price action is bearish. And the important level of resistance is here, which is coming exactly on the top line of the triangular formation, the top trend line of the triangular formation. Moving to 1-hourly chart, I can see that the price action is still bearish with a sequence of lower highs on 1-hourly chart. So until one of these highs is broken, the price creates higher high, the idea remains bearish. The view remains bearish for euro pound. Moving to 15 minutes. Even on 15 minutes, it's strongly bearish. If you compare the MACD histogram, compare the highs and the lower highs, the price action is bearish even on 15 minutes. So all time frames starting from the higher time frame till lower time frame, there is a synchronization towards a bearish behavior. And we have taken into account the next web level, so you can easily go for sell trade at the beginning of the week. So what I've done here, I'll go back to weekly and moving to the bar chart or the candle chart, you can see that I've protected my stop loss slightly higher to the highest level of the previous week, and the target level is 0.618. So the risk and reward is 1.3. Not very amazing. I generally don't trade if the risk and reward is less than 1.5, but due to the limited trading opportunities, because dollar index is not clear, the pattern is not very convincing of dollar chart, so we have to find trading opportunities in the cross pairs. Now the next cross pair I'm going to talk about is AUD versus New Zealand. Again, I'll start from the weekly. Now based on the weekly pattern, we have high, lower high, lower high, and lower high. At the same time, we have low, higher low, higher low, higher low, and higher low. So again, we are stuck inside the triangular pattern. So what I've done here, I've plotted a falling channel connecting the high and the lower high, and I've drawn a rising trend line here. Now again, plotting the fib extension starting from this high to this low and the lower high, the downside target is 61.8. The pattern is very similar to EURGBP, and here again I'm expecting that the channel would be broken to the bearish side with a retest, and the target would be first extension level of 0.618, and the level is 1.0450. We have derived the target on the weekly chart. Now let's move down to daily. Now based on the daily, again the pattern is bearish. We have high, lower high, lower high, lower high, lower high, and lower high. Higher lows. So the idea is, if the triangular pattern is broken, this is the next level to look for. And the MACD histogram, MACD lines, they are clearly bearish, even on the daily time frame. Going down to 4H. On the 4H, again, I can see the behavior. The price pattern is high, lower high, lower high, lower high, lower high. So it's continuously creating a sequence of lower highs. That means the price action is bearish. Even on the MACD, the histogram is bearish, MACD lines are bearish. I do not see any bullish divergence, means no reversal being formed at the moment. So definitely I'm looking for the downside target. 1 hourly chart is also definitely bearish. I do not see any signs against. I do not see bullish divergence printing on the chart, so it remains bearish on 1 hourly as well. Quite similar behavior on 15 minutes. So we have, going back to the line chart, we have high, lower high, lower high, lower high, lower highs, lower highs. Now we can expect, if you get the completion of bullish divergence here, but without breakout structure I cannot expect bullish price action. So even if you get an opportunity to sell after the rise, you should grab it. So the plan remains to sell on the rise until it reaches Fib extension level of 61.8 plotted on the weekly chart. So EURGBP bearish, AUDNZD bearish for the upcoming week. The next cross pair I'm going to talk about is CHFJPY. Now I'm starting my analysis on the weekly time frame, but I've taken into account the swing low which was created at the beginning of 2023. So I've started marking rising channel here based on the bar chart. So we have connected the lows and the highs. So we have the first rising channel. I'm talking about first rising channel, second rising channel, and then the third rising channel. As per the concept, usually the exhaustion comes on the third channel, and we can see that the buyers, they are unable to cross above the diagonal midpoint level of the third channel, and they are facing a lot of resistance here. So we can expect short-term pullback, although we see not very strong bearish momentum on MACD histogram, as well as the MACD lines are also pointing upward. So it's a mixed scenario, mixed bag based on the weekly time frame for CHFJPY. Now if you see on daily time frame, what I've done, I've taken the Fib extension level which was plotted on the first move to the upside. So we have taken into account the Fibonacci extension to the bullish side, and the price reaches exactly the cycle completion level of 300% here and gets a false breakout. So the bullish breakout was a false breakout, and now again the price closes lower than the Fib extension 300% mark, that is 170.81. So which gives me that the hint that the buyers are now exhausted. But definitely I do not see the completion of bearish divergence on the daily chart, which is again creating short-term scenario of pullback only, but not a long-term reversal to the downside. So here, this is your weekly resistance level, your Fib extension level. We got the false breakout. Now I can expect short-term pullback at least towards the previous horizontal support level, and I'm taking into account the previous Fib extension level of 2.61 and the weekly horizontal support. So this is how I'm expecting a short-term pullback in CHFJPY, which we should capture, and again continuing to the upside. So let's see how it's behaving on 4-hourly chart. Now on the 4-hourly chart, if you see, we have higher highs, false breakout of this resistance level with bearish divergence on histogram, with bearish divergence on MACD lines. So definitely the buyers are exhausted and the bearish pressure is building up, but we do not have the breakout structure. So this is the point of concern. Again, not a very strong scenario, but if you want, you can take a chance and grab the short-term sell opportunity. Now moving to 1-hourly chart. Now based on 1-hourly chart, I can see the sequence of high, lower high, lower high, lower high. So what we have done, we have taken into account if we sell from the current price level, and if you protect your stop loss at slightly higher than the recent high, and if you aim for the next horizontal support level which was derived on weekly and daily chart, the risk and reward here is 1.7, which is decent. And that's how we can play short-term bearish for CHFJPY. So we have covered until now EURGBP, Aussie New Zealand, and CHFJPY. The next currency pair I'm going to talk about is USCAD. Now, because US dollar is slightly bullish based on dollar index, I have a bullish point of view for dollar CAD only for the short term. Starting from weekly as usual. So what I've done here, I've drawn the rising channels and I have joined, and I've plotted the horizontal levels of support and resistance based on the weekly chart. So currently USCAD is at very, very interesting support level and getting a bounce. So if you see, starting from this level to this level, if you plot Fib retracement, I can expect at least 50% pullback or towards the 50% of the rising channel. That's a diagonal line, and then continuation to the downside. So this is the idea based on weekly chart. We have a confluence of support here coming from the rising channel. So this is the diagonal support and the horizontal support. So price bounces strongly from the confluence of support. If you want to see as per the candles, I'll zoom in. So this is what I'm talking about, a very strong support due to the horizontal levels and the rising channel. So confluence of support, and we get the bullish bounce. Going to daily now. On the daily time frame, I do not see bullish divergence on the chart, so definitely I'm not expecting a complete bullish reversal here. But what I'm talking about is, if you compare the lows, the last two lows formed on the daily chart, I do not see bullish divergence coming into effect. So what I've done here, I've drawn a Fib level, the Fib retracement starting from here. So this becomes our A, end of Fib retracement. This is our point B. So we will apply Fib retracement, and we can expect retracement at least towards 61 of this cycle. I've also drawn a duplication of Fib retracement starting from this swing high to the low, and we'll see where is the confluence of the two different Fib levels coming into picture. So here, starting from the top, connecting to the lowest, the swing low and swing high, and starting from this high again to the same low. So the duplication levels are here. So we can see we have 70% retracement of the smaller cycle, which is also 50% retracement of the bigger cycle. So this is the magnet zone. So here we have 38 and 50 of the bigger cycle, and 70% retracement, 70 to 80% retracement of the smaller cycle. So I'm expecting continuation at least towards this area, and then a bearish price action. Moving to 4-hourly chart. So based on 4-hourly chart, we have equal lows, and then we have the pattern of higher lows, higher lows, higher lows. So very, very strong Fib support level at 1.3350. Price pulls back, retraces into this zone, and again bounces strongly. And if you see MACD lines, they are curving up. They are now about to make a bullish crossover here. The MACD histogram is also turning bullish. So 4-hourly is again sideways, but the expectation is that it will continue to the upside to reach to the magnet zone based on the higher time frames. The Fib retracement magnet zone based on the higher time frames. Hourly chart. So lower time frame is again unclear because we have sideways consolidation here. So if it remains above this level or 1.3310, we can expect continuation to the upside. If it breaks below this level, we can plot a rising trend line here. So if we get a break below the rising trend line, more importantly, lower than 1.3350, you should take it as invalidation of the bullish point of view and exit your buy trades. And a very interesting opportunity in Japanese Nikkei. So here we have JP225, that is Japanese stock index. Starting from weekly, what I've done here, I have plotted the rising channel, taking into account the low created during COVID in March 2020. So I have taken it as my lowest point, the reference point, the swing low. Then I have connected. So here we have low, higher low, higher low, and I've connected a rising channel. So currently we are above 50% mark of the long-term rising channel, which is a good sign for the buyers. If I zoom in, you will notice that we do not see any signs of slowdown on MACD. It's clearly bullish. Going back to daily, I do not see any signs of slowdown on MACD. It's clearly bullish, and this is the long-term rising channel I'm talking about. And we have a very strong support around 34,000, 33,965 or 34,000 as round number. So 33545 coming from the fib number, the fib extension which I've plotted to the rising side on the weekly chart. So if we get a pullback, then most likely it should honor this horizontal level or the rising channel level, and it should continue to the upside. So the next target inside is 36,000. And I've also drawn, once again I'll go back to weekly. So what I've done here on the weekly chart, I have taken into account two different fib extension cycles. So this is the first cycle I'm talking about, and we get the extension levels, and then I have plotted the second extension cycle, and I'll show you the magnet zone. So the 100% extension of both bullish cycles is around 39,683 and 39,153. So this is the range. So this is the future target for Japanese Nikkei. So it will be around 39,153 to 39,683. So any opportunity, any pullback in this stock index should be taken as an opportunity to buy, with the target as 39,100 to 39,683. Same story on 4 hourly as well. So I do not see any signs of slowdown. We have high, higher high. Right now we are exactly on the diagonal resistance level, so you can expect short-term pullback towards the 50% mark and then continuation. So I see high and higher high. No bearish divergence coming into picture, just a short-term pullback. So short-term pullback should be taken as an opportunity to buy and hold. Moving back to 1H. This is clearly bullish with short-term bearish divergence coming into play at the diagonal resistance level, which will give short-term pullback and an opportunity to buy for the future bullish targets. So these are several instruments which I've shortlisted and explained for the upcoming week. I hope it adds value to your trading, and to know more, stay tuned. Please subscribe to my YouTube channel, and don't hesitate to ask your questions if you have any doubts. Take care and bye-bye.